Our market master of the day is with us. Naren is Executive Director and Chief Investment Officer at ICICI Prudential Asset Management Company. Naren, it's always a pleasure. Great to have you with us here on CNBC TV18. Prashant this side. Naren, how do you assess prospects for the market from here on? Are earnings at risk? Is that the big worry because of very high commodity prices? Or do you think it's manageable?
I don't think earnings is going to work both sides. So if you look at commodity companies, you have companies which are going to be making commodities which are going to be benefited, and there are going to be users of commodities which are going to be affected. So I don't think earnings and, as commodity prices increases, need for inventory goes up, that means need for credit goes up, that helps banks also. So I don't think earnings is so much of an issue as much as the fact that, you have daily statements from the US saying interest rates will go up, they're going to do quantitative tightening of $95 billion a month. I think those kind of things are much more worrying than earnings at this point of time. I don't think earnings is a problem. We have historically seen that inflation and earnings go together, deflation and earnings go down together. So we are in an inflationary period where earnings are going to be positive for at least one set of companies.
Okay, Naren, hi, good morning. Thanks for joining us.
Good morning.
Naren, going forward for this market then, we've seen so much retail inflow which has sort of protected this market from falling a lot in the face of all the FIs selling that we had seen. Do you get a sense that this year towards the end we could get a bit of a Goldilocks scenario in terms of FIs also coming back and retail flow also being strong? And could that lead to a bit of a melt up in the market?
See, can melt up happen if interest rates were to keep going up is the question that I don't have an answer to, because I don't know whether we're going to have that situation in 2022 or in 2024, because whatever rate hikes that are going to be done in India is going to, or in US, is going to happen in the next 18 months. Are we going to have a situation where US rates are going to go up? People are talking about 50 bips next month and another 50 bips in June and subsequently rate hikes. So I think the next 18 months is going to be about continuous rate hikes in US. Are we going to have a situation where there'll be no rate hikes in any other part of the world? I doubt it. So I think we can have that melt up possibly in 2024, which is the reason why we've been recommending SIPs and STPs and those kind of things. But can it happen in the second half of the year? To us, it can happen in the near term if Ukraine issue gets resolved. You have a $20 drop in oil, that can lead to a big positive. Certainly that can happen in the near term, but can it happen in the second half of the year when interest rates are shooting up? I doubt it, but it can happen in the near term certainly.
Okay. Naren, hi, good morning. I want to talk a little bit about the new NFO, the Housing Opportunities Fund. We were just discussing how real estate companies have delivered exceptional numbers this time. Of course, it could also be because people are taking advantage of the stamp duty cut. But what is your own sense of which way this could head? You think there's a big growth opportunity in the real estate space now?
See, basically there is no bubble and the prices are more or less static. It is just that the affordability has improved significantly. And due to that, you have a situation that the supporting sectors like banking, housing, finance, cement, power, consumer durables, many of them are getting more and more interesting with the kind of cost of inputs going up in some areas. And many of those sectors underperforming, and the next 18 months are going to be volatile, giving rise to a good long-term opportunity in many of these areas. I don't think we are in a situation where real estate prices are going to shoot up the way it was. But this kind of an environment is more supportive of investing than a period like 2012-13, where people were willing to buy under construction property delivered years later. So I think this is a more healthy environment at this point of time. And that is how we see it from an investor perspective. As such, from an investor perspective, actually big bubbles are bad. Uncertainty is good. People think that bubbles are good and those kind of environments are positive. But look at it, investors who invested in 2007 and 2017 did not make money, and people who invested in uncertainty in 2013 or 2018, they had a better investing experience. So I believe that we have to have environments where there is more uncertainty, more volatility, and investors who invest in more uncertainty and more volatility make more money than people who invest during periods of time when everything appears perfect and markets are shooting up each day.
And so we have a fair bit of uncertainty lined up ahead of us, don't we? So then the question becomes,
Yes.
but then it also kind of has to tie in with the market has to reflect that uncertainty. One is not sure whether it is reflecting that uncertainty with valuations being compressed, etc. Are there which are the pockets? I mean, you, for example, over the years have been been an advocate of beaten down, unloved sectors like maybe not anymore, telecom, power, etc. Do you see value there? Where do you see value really?
See, look at it, banks haven't done well for years. Housing finance companies haven't done well for years. Now, cement has underperformed for years. Auto has done badly for years. So you have a fair number of sectors. Even power, leave aside the last few weeks, hasn't done well for decades maybe. Many of the PSUs haven't done well for years. So I believe, yes, the real pockets have been sectors like small caps, mid caps, some of the consumer-oriented names, some of the new age names, some of the IT-oriented sectors. These are the areas which have actually got re-rated over a period of time. So I think the markets have not moved in unison across the entire spectrum. So we do, and we think that the next 18 months will present a lot of interesting opportunities. And that is how we see it. It is the biggest froth has been in some of the small cap, mid cap and new age companies. And some of the new age companies have recently anyway withered away. So I think that definitely the uncertainties at this point of time is giving rise to some amount of correction. But yes, I do agree that many of the small caps and mid caps have just not corrected. And there is a fair amount of retail investor interest. So, but I think the investing environment that we at ICICI Prudential see over the next 18 months is interesting. It is just that we have to be disciplined. And for example, people used to tell us, can you make money in metals? So we were very clear that we can make money in metals. People used to ask us, can you make money in power? We used to be very clear we can make money in power. So many of the things, you know, we have to be disciplined and we have to be patient. And these are the things that we've learned over a period of time. And we will continue to adopt that principle when we are investing for other people's money
Naren,
over a long period of time. And that has worked.
Just to extend that point, Naren, and I still vividly remember, I think you were the first to turn positive on telecom. That was your biggest contra bet, I think 4 years back. And as you said, even about power as well. Now, both these spaces have seen big rally. Of course, in telecom, we don't have too many listed stocks, but the one that you own has actually done remarkably well. Now do you think it's a bit of a crowded trade, both on telecom and power? What would be your view?
I mean, you should look at some of these sectors from the point of view of underperformance. Look at power, look at 3-year, whether has it underperformed. It has underperformed hugely. 5-year, it has underperformed hugely. 10-year, has it underperformed? It's underperformed so dramatically. Some of those stocks are where they were 15 years back. So, and then we worry about 1 week outperformance actually. And are we more dependent on electricity than we were 15 years back? Today we are talking about a situation where most of the cars and most of the automobiles will run on power. Are we more dependent on power than we were 15 years back? Certainly. Are we more dependent on telecom than we were 15 years back? Certainly. So I think what happens is that we always tend to think, actually if you compare where telecom was 16 years back and where 15 years back and where it is now. Look at the underperformance that we've seen over 15 years. So, and as I mean, today the cost of, as we were discussing in one of the telecom analyst meets as well, the cost of a monthly ARPU is today 1/3 of the cost of some of the movie tickets at this point of time. So I think there is huge potential even today at this point of time. Today take a contrarian sector like auto. Auto has not delivered for years now. So I think over the course of the next 1 year or 1.5 years, people will soon tell you that you don't have, like people used to tell us, you don't need metals to produce consumer durables. People will soon say you don't need auto to move around. So then in the next 18 months, auto will become a very, very cheap sector. So that will give you the opportunity over the course of the next 18 months. So that is the advantage, I would say, of contrarian value investing over a long period of time. At all points of time, you look foolish, but in the long run, you can make money. And that is the framework which has worked over a period of time.
So since we're talking about the long run, right, Naren, just wanted to come back to that point where you were making about how there could be money to be made in the metal sector. I mean, for example, Tata Steel, right? It had a beautiful run. If you look at a 2-3 year horizon, went from 500, now at 1300, almost 1400 now. Do you think the major chunk of the gains are already behind us, or can metal still deliver an alpha compared to the rest of the market?
So the bigger areas of contrarian investing at this point of time are clearly banks, housing finance, I would say auto. These are all some of the areas, and if consumer-oriented sectors like FMCG continue to underperform every month, or cement continues to underperform the way it has been, I think those are the areas of which are becoming more attractive. Sectors like metals, what has happened is Ukraine kind of developments have given such a beautiful fillip to that sector that what was doing well started to do too well, and therefore it no longer represents value the way we look at it, and that's why it no longer is safe as it used to be a few years back. That's how we at ICICI Prudential see it at this point of time. But the near term does look very good. But whether the long term, many of these steel prices can hold, it can't, because then most of the other products become difficult to sell. So it can't hold, and that is how we see it at this point of time. I think many of the user segments are more contrarian, are more value at this point of time. And that is why we think that many of the housing-oriented industries today as user segments, those stocks are more attractive for long-term investing than steel kind of sectors at this point of time.
Okay, got that. Naren, we'll leave it at that. Thanks a lot for joining us, and all the best, especially with your new NFO. They have, ICICI Pru has an NFO called Housing Opportunities Fund. They are very, very bullish on the real estate space. All the best.
Thank you.
All right. Well, that's one of the veterans in the wealth management
Sonia,
space.
it's interesting because guest after guest who's come on, the last thing that he said, he would bet on commodity consumers and not producers.
Yes.
That's completely contrarian to what we've heard from so many, right?
Yeah.
Who said that this is not the time to bet on commodity consumers, bet on producers. But as he said, I mean, that's contrary.
I think Naren takes large contra bets. I think he was the first to turn positive on Bharti when almost nobody was buying it. I think similarly with power stocks, I think real estate stocks as well. So I mean, and that's worked so many times.